Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. Okay, as of late, there has been more discussion, at least coming my way, about the whole S Corp election, where someone may have a single member LLC and they're thinking about making an S Corp election. And the main thing they come to me is that, and say to me is that they heard that they can save on self-employment tax when converting to an S Corp. But I want to talk about the things, the other things that don't come along with the conversation to help you understand why self-employment tax really is not the only consideration to be taken into account when you're talking about making this S Corp election. Because it's the part that you don't know that will turn around to bite you and really hurt you, okay? So the first thing is that with an S Corp, one of the rules is that the owner must be an employee of the business, okay? That means that you, the employee, must pay yourself a salary, withhold employment tax, all that, issue yourself a W-2 at the end of the year. Now, where you save on the self-employment tax is after you've paid, the S Corp has paid your salary and written off, its expenses. Then whatever is left over in profit is issued as a dividend, and then there is no self-employment tax on that. That is absolutely true. Now, the problem, though, is when you don't really know about the administrative costs of maintaining an S Corp, that turns around to bite you, to really help you understand what you're getting yourself into, okay? This is not one of those things that you should just go and do all willy-nilly on your own without some actual consultation with a tax professional, a CPA, attorney, somebody with some kind of experience in this area, because getting it wrong is very costly. So I will say up front that if you have a single member LLC and then you elect S corporation status, and then you find out this is not for you and you don't want to play in the sandbox anymore, you can revoke your S election status. However, you can't become an S Corp again for 5 years. So even if later on, a year or two down the road, that it would be a better idea, an S Corp would be a better idea for you, if you've revoked your S election, you have to wait at least 5 years in order to become an S Corp again, okay? But let's talk about the stuff that folks don't talk about, because everybody's like, oh, you can save on self-employment tax, but let's talk about the stuff folks don't talk about, all right? So first, with the salary part. That means that you now become an employee of your company. So your company has to withhold employment tax. That means now you're back on a paycheck. Whether you like it or not, you really are back on a paycheck. It's just from your own company. But with that comes that withholding employment tax and sending that to the government. That's number one. Okay, that's just dealing with the federal, and that's your federal taxes, what your normal payroll taxes are, right? Your federal, Social Security, Medicare, and state taxes. So that's number one. Number two is also the franchise tax that may be involved. The S corporation is a state regulated is a state regulated entity, which means your state is involved in your S corp. Your S Corp does not pay federal taxes. It files a federal return, but it doesn't pay taxes. But you got some, you may have some other requirements at the state, and a lot of states charge a franchise tax. It can be based on the amount of your gross receipts. There can be a minimum tax. There can be a franchise tax plus some other, what do they call it? Business privilege tax. There's all kinds of other state taxes that may be associated with your S Corp. And if you don't know that, then you are setting yourself up for a bill that you're not ready to pay. The next thing is really the cost of administration. When you have an S Corp, you need to be ready to outsource your payroll, your bookkeeping, the administration for your annual meetings, all of those detail things. If you are running a business, you don't have time to do those things. So you need to be prepared to outsource this. One of the other things that I will tell you is that when somebody comes to me and says, okay, I think I should be an S Corp, the first thing I ask is, show me your bookkeeping, show me your profit and loss statement. I can't tell you how many people have no idea what their profits are. They know what their gross is, but they don't know what their profits are. That makes a whole lot of difference. So if your bookkeeping is not even in order, if you are not structured as as a single member LLC and you are not paying yourself regularly there, how do you think you're going to manage on with an S corp on a W-2? Right? If you're not making enough money as an LLC to pay yourself, you have absolutely zero business being an S corp. Okay. And it's also a discipline factor, because the one thing that you can't do is use your business as an ATM. I tell you that all the time. So the cost of administration is having that payroll, being able to outsource your payroll, your bookkeeping, and all that. You need to be able to outsource that and let someone else handle it while you focus on building your business. If you're saying, I can't afford that, you have no business being an S Corp. But the other thing that's on top of this, there's a lot of other things. The next thing I'll be talking about is increased insurance costs. There are some states that require you to have a certain amount of insurance when you make that conversion from an LLC to an S Corp. So you have to know what those insurance costs are. Can your business support that? Okay. And this is not something that you get to decide. If your state says that you've got to have XYZ, then that's what you have to comply with. And please, oh please, do not make the mistake of thinking, oh, I'll just go form in another state. It doesn't work that way. You might form your S Corp or your LLC in another state, but you still have to register that business in the state in which you reside, and you still have to follow the rules of the state in which you reside. So going to form a business in another state really doesn't necessarily save you on taxes. And as a matter of fact, it might cost you more. All right. So increased insurance costs, and then the additional tax prep fees. If it's one thing where I've seen people stroke out, is on these tax prep fees, because you do have a lot more to do with taxes. So not only do you have your S Corp return that has to be filed now, and oh, by the way, those are due in March, not April. All right. So you have your S Corp return, you have your quarterly payroll returns, and then you also have your annual payroll returns, and you have your personal return. All of those returns cost money. Okay? So it's not, you're not, as a single member LLC, you got one tax return. When you graduate to an S Corp, you got 4 or 5 of them. And that's for, your federal and your state. You have to file these things. So this is not just something that, oh, I'll just go and, form an S Corp and I don't have to pay myself. No. That is not how this works. And oh, by the way, if you go and form this S Corp and then you don't do all the things that you're supposed to do, like paying yourself, the government can make you go back and file those returns, and it's ugly. It really is. So those are additional fees. Some states require a corporate fee. I mean, there's all the additional fees that you have to take into consideration. It's not just about self-employment tax. You have to do the math on all of it, because after you do the math on all of it, you may find that becoming an S Corp is not the right thing for you right now. Because in your haste to try to save on self-employment tax, you go and form this S Corp, but then you create more bills that cost more than the self-employment tax than you were paying. So this is why you don't go do this all willy-nilly. It's not just about the self-employment tax. There's all the other fees that go into running an S corp. Are there some people that save on self-employment tax? Absolutely. And to save on taxes altogether. Absolutely. But this is not something where you just wake up one day, you watch a YouTube video and go, oh, I can just file this form and I can become an S corp and voila. Yeah, you save on self-employment tax, but you about to go spend a whole bunch of money on some other stuff. So how does that benefit you? You might save $1,000 in self-employment tax over here, but if you paying out $2,000 in all these other things, how's that working out for you? It's not. And so this is why I tell you, before you go do this all willy-nilly, you need to make sure that you have consulted with your tax professional, with your CPA, with your attorney, to have done the math on this to make sure that this is the right thing for you right now. Because getting it wrong is going to cost you more on the back end. It'll cost you more if you're ignorant of your state's requirements, if you're ignorant of the federal requirements, if you've got to pay for all these penalties because you didn't know. It costs you more on the back end. Suddenly that self-employment tax looking kind of good. Okay. So yeah, I feel like I'm sounding a little preachy this morning, but it's just, it just burns me because I see the posts on social media, you guys. I see the posts that say, if you have this S corporation, you can be saving on self-employment tax. So people be telling you, oh, you're overpaying on self-employment tax. Okay. Well, that might sound good, but that's not the whole story. So you cannot get all of your tax advice from social media. I do these videos how many times? 5 days a week. I share videos. This is not enough information for you to make a decision about your business. It's just not. So yeah, this is, and someone else just made a great point. You, if you're not contributing to, your Social Security and all that, your benefits are going to be lower at retirement. So when you think about, if you're complaining about Social Security right now, and then you're not really contributing to your own Social Security and Medicare, what you think Social Security is going to look like for you when you retire? No, we don't want to depend on Social Security. We already know that's not enough money. But at the same time, if you're going to pay the benefit, hey, get your money. So, yeah. So if you are watching this video and you are thinking about, making that election, please, oh, please schedule a consult. Invest in the consult in order to find out if the math really works for you. Because that $200 or $300 that you pay for a consult is going to save you thousands on the back end. It is definitely worth the investment to do it before you make the decision. Because if you wait until after might be too late. And after might cost you a whole bunch more money. Okay? So thank you guys so much for tuning into Home Biz Tax Talk. I hope this gives you something to chew on. Again, we air Monday through Friday, 9 o'clock-ish, and you can come right here to get your questions answered about your home business taxes. All right, have a great day, and I will see you all next time. Bye.